What's going on, everybody? Welcome to the Gray Report. I'm your host, Spencer Gray, joined by Matt Bossnagel, Director of Communications and Marketing here at Gray Capital. If you're a real estate investor, you work in the real estate industry, specifically the multifamily industry, you're in the right spot, because here at the Gray Report, we cover all the latest research reports, articles, opinions, and data sets, all revolving around the multifamily industry, real estate, and the macro economy in general. We've got a great report, Matt. We've put a lot of great articles together. We've got reports from Florida Atlantic University, Forbes, Apartment List, Globe Street, and Rent Cafe. Again, a lot of stuff going on in the macro economy. Exciting stuff for multifamily. Let's just dig into it, Matt. All right, we are live from the Gray Capital headquarters here in Indianapolis, Indiana. Matt, again, put together a great show today. We've got a lot of interesting articles. So many things are moving so quickly.
Yeah.
Whether it's geopolitics, real estate, the economy. I mean, the stock market's been doing horribly.
Yeah.
Multifamily's just been crushing it, continues to. Inflation still top of mind, but there's all kinds of other stuff going on. But how's your week going? What's the mood?
Another good week. I think along with the rest of the world, everyone's worried about the war in Ukraine.
Yeah.
And the idea that this is going to be a long slog is something that I think should rightly worry everyone. I don't see a big impact in multifamily, but I think that construction is going to be affected now. You were just talking about gas prices and commodity prices, and that's going to have a ripple effect, not just on construction, but on people's lives and the way that they do business, where they get to work. So it's going to be, it'll be tough. And I'm hoping that, the story of the recovery was so powerful. It's hard to think that, but you know what? It's a small world, I guess.
It's true. It's a small world, and there's a lot of pushes and pulls going on because, as you said, the higher gas prices, $4 plus a gallon to fill up your tank right now. That cuts into consumers' budget, how much they have to spend on other items, including rent.
Yeah.
At the same time, the consumer is financially in the best spot that they've been almost ever. I mean,
yeah, that's a good point.
A ton of equity in homes. Savings rates are at all-time highs. We're seeing wage growth, across the board. Inflation's also high, so we're not necessarily seeing a ton of real wage growth, but at least it's just about tracking it in some markets.
Numbers coming down, and
we're seeing record low unemployment. I think they just revised the December job openings or available jobs, and it's the highest on record. So really strong job growth, which I think is going to continue to push wages up.
Yeah.
But then, as you said, man, I think nickel shot up like 90% this week. Wheat's way up because Russia and Ukraine are one of the largest producers of wheat.
That was surprising too. Yeah, that's really a breadbasket, and there's that's some real pain that. That's a global thing. It's crazy.
Yeah, 100%. And then what are the consequences? And I don't think anybody knows of, we're no longer going to be importing oil from Russia anymore, and businesses are cutting off ties to Russia. And Russia was not a huge part of the economy, but still, that's a lot of disruption.
Yeah,
shaking
when it's
things
something as crucial as like wheat and oil. These are like what people use to get energy, and what machines use to get energy, and just a slight little fluctuation like that. Could have a way bigger effect.
And we were already in an inflationary environment, and we've seen rents continue to outpace inflation as they have done historically. Mm-hmm. And so the question is, is this going to put too much pressure on the consumer where they can't absorb more rent growth? Or are we going to see, as we've seen almost every time in the past, where rents just continue to float on top of inflation and really outpace it? And is this more fuel on the fire for the multifamily investing industry?
That's what it seems like. So many investors, so many apartment buyers are betting on that and like vigorously, really thinking that prices are going to go up, that it's really important to get into these hard assets and to really expect inflation to make
it's one of the best risk adjusted returns anywhere. And then when you talk about a hedge against inflation, the three asset classes you hear people talk about are real estate, stocks, and commodities.
Yeah.
And, commodities can be pretty volatile. The stock market, which is in the tank right now and is volatile, but multifamily just keeps chugging along. And so in terms of risk-adjusted opportunities, because, you could say hospitality is a better hedge against inflation, but much more volatility. So really multifamily is in this sweet spot. And I thought, because, we were bidding on a pretty big portfolio.
I was going to ask you how's your experience? You got some first-hand experience.
It was one of the first big deals that we've really gone after and been in the middle of in 2022. And amidst all this uncertainty, other markets, there's a lot of softness. People are sitting on the sidelines.
Yeah.
Not the case in multifamily. We were hoping that maybe the field would be cleared a little bit. Maybe people were being a little hesitant because of all the uncertainty. Not the case. So we were going after a large portfolio, 3 properties here in Indianapolis, and the pricing. It's like we've seen last year. It's another 10% over Whisper.
That's what I was just going to say.
Record high prices. Now, the prices on a price per unit basis and a cap rate basis are hard to wrap our heads around. But when you factor in the growth that we're seeing, you can make sense of it. And the problem, and we're not going to win this portfolio, but the reason for that is there are investors out there and buyers who have relatively low return thresholds, but there's so much capital they have to place. And we're going to see this trend beyond the fundamentals of the apartments themselves and demand from residents and renters. And I know we've got a lot of good pieces to get into, why renting just makes so much sense right now. But then you've got the demand from investors, global investors, money that's pouring in from all around the world into the United States because it's more stable. And then even, domestic investors trying to find that right asset class that's going to help them get through this period and for the long term. And it's real estate, it's multifamily.
Yeah.
So that's going to continue to drive up prices. And so it's an incredible environment. It's great for current assets. It makes it very difficult on the acquisition side. I think there still are opportunities, but I think if you're not plugged in, if you're not subscribed to the Gray Report, and you're not up to date on what's going on at the granular level, it really wouldn't make sense.
Yeah, well, and that's what I want to get to in one of the articles here is there are larger trends of supply and demand, but if you're looking, there are individual wins that you can get. No market is the same, and it's hard to make a blanket statement unless it's like unless we're looking at long-term trends.
Yeah.
So there's ways to find deals, but it's certainly more competitive. And I will say, even in this competitive market, the rents are such that, and we'll talk about this in just a second, the rents are such that it's still better to rent than to own. So,
and rents, I haven't even, other things, the prices of other parts of CPI, for example, they've risen even more. I mean, rents are still beating inflation, but and you look at in the context of all the other items that make up CPI, rents actually still have quite a bit of room to go, which is mind-boggling.
It is. It really is. Yeah.
Let's just dive into it. Let's look at this first report from where we got from Florida Atlantic.
Yeah, and
University.
We've covered some of the work that they've done before. This article is really more of, I don't want to say it's an old chestnut, but the point of this article, I think, is one that is imminently graspable for really anyone that has bitter memories of the housing crisis of 2003 to 2009. As the researchers put it, they say, even though prices are high right now and rising, renting becomes a hedge against locking in a home price that is too far above a market's long-term pricing trend. And this is actually their older article that we covered earlier. They talked about this there are a set of markets, and this number is growing, where the long-term where home prices right now are way above their long-term average. And in those cases, it's better to rent. Yeah. And so for the majority of markets, it's better to rent than buy. But
there's a caveat there also, because if you just rent, and so let's say you had a down payment, you could buy, let's say you're a renter by choice, you can buy a house or you can choose to rent somewhere. Yeah. You got your 100,000 or whatever you need for your 20% down. You can't just leave that into a savings account.
Yep, because you're not making anything in a savings account.
Exactly. You're making absolutely nothing.
And the bank gets to use your money, but...
Yeah, the bank will use them. Lend it out.
It's like a favor.
So if you want to invest in real estate, you're like, hey, no, I want my net worth to be allocated to real estate. Okay, well, find the best real estate investment, rent, and then invest in a syndication that's going to buy your apartment building or whatever, whatever asset class you're interested in, or in the stock market. I mean, the bottom line is being invested in the market that's going to outpace inflation and that's going to be earning you more than what it would have been sitting in a savings account or a bond.
The quote is it says, our index, and this is kind of their closing quote. It says, our index is showing you don't need to be a homeowner to build a retirement nest egg. But, and this is what I underlined here in my notes, if you don't think you'll invest your rental savings, it's better off to buy a home, especially if you plan to stay there for several years. So even if home prices fall, though, you'll be able to kind of have
it's like an automatic savings plan.
Yeah. But again, if you're invested somewhere else, if you're invested in a stable, multifamily building, then that's going to do better probably than your home.
Yeah. For example, I'm just thinking about one of the properties we're going to be selling here in the next couple of months. We only held it for 2 years. Typically, we hold properties quite a bit longer, usually 5 to 7 years.
Yeah.
But this is a shorter term hold. Investors are going to double their money in about 2 years. So think about if you'd have bought a home, you would have gotten some nice price appreciation because especially if you're using leverage, but you weren't going to be doubling your money within 2 years.
Yeah.
And if you wanted to actually realize that gain, you could maybe refinance, but most likely have to sell it. You got to find a new place to live.
I'll have to check my Zillow estimate for my house, but I don't think it's doubled.
It certainly hasn't doubled.
Yeah.
Maybe your equity has gotten close, but not the same. No, I think that makes a lot of sense. Buying a house, again, it's like a built-in savings plan, built-in investment plan.
Yeah.
But is it the absolute best investment? That's the question. And usually it's not a bad investment, but there may be. What I always think back to is your perfect place to live for you and your family. Is that always going to be correlated with the best use of your capital?
Yeah.
And rarely do they line up perfectly and also match your return expectations for income and appreciation? Because if you do another investment throws off cash, it's a lot better than
And I
paying
think
the bank.
that it's also where, there are other benefits to, you get a little more freedom, a little more flexibility when you're buying your house, but you just can't treat it as a investment. There's reasons why people buy a house that, and I don't think they're crazy. I have a house, you own a house, but it's
for other reasons.
Yeah. It's not for building wealth.
Yeah. We're hoping that it increases in value.
Yeah.
I mean, just like you could buy, some other things, you buy a Rolex and you think, okay, well, I'm hoping this at least maintains its value, but I'm not looking at it as like, oh, I'm going to, I'm going to get rich from, buying a collectible or something,
and
NFTs
frankly,
aside.
Treating it as an investment is kind of, it makes it a little bit weirder for people that do want homes.
Yeah.
And it makes it even harder for first-time homebuyers especially to enter the market if everyone's looking to.
As far off the deep end as Robert Kiyosaki seems to have gone at times, the whole idea of that, not viewing your home as an asset and more as a liability, I think is totally the case.